Stocks correct on Wall Street with the Dow Jones falling for the sixth day in a row, registering its longest losing streak since April this year. The S&P 500 and the Nasdaq also end lower as PPI inflation for November comes in higher than expected. Asian markets are largely lower as well following that weak session on Wall Street. The GIFT Nifty also is suggesting a gap down for our own markets. Gold prices have hit a 5-week high but fall after higher than expected PPI inflation reports. Oil prices remain range-bound around $73 a barrel. Retail inflation in India cools to 5.48% in the month of November, easing from a 14-month high. Food prices, however, remain stubbornly on the higher side. Industrial output also expands to 3.5% in October, led by a rebound in manufacturing. And 18-year-old Gukesh D makes history, becoming the youngest world chess champion after beating defending world champion Ding Liren. Gukesh is only the second Indian after Vishwanathan Anand to win the title. Good morning on this final trading day of the week. You're watching Power Breakfast on CNBC-TV18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are faring, and it is not a very good start to the Asian indices. The Hang Seng trading with losses of close to 1.5%. The CSI 300 in China is also trading with losses of almost 1.5% as we speak, as is the Shanghai Composite. The Taiwanese index too is down around 0.3%. The Nikkei in Japan is also trading with losses of 1%, and the Kospi is seeing some profit booking after a 3-day rally that was a recovery from the lower levels. But it is the Chinese markets that are in focus, right? And that is because of the China stimulus pledges that were announced yesterday, and Beijing reaffirmed its recent policy shifts and stressed on plans to boost growth. Now, this is following a high-profile meeting led by Chinese President Xi Jinping. CNBC's Emily Tan has more details on what transpired during that meeting.
This meeting was headed by President Xi Jinping, pledging to attain next year's growth target to better support private sector. Now, in terms of the growth target, they had said that it's going to be remaining stable. So what that means, largely, analysts expecting to maintain this around 5% growth for 2025 as well. In terms of the impact of external changes deepening and the Chinese economy still facing many difficulties and challenges, they say they must realize that China's upward economic trend has not changed yet. They went on to say that the policy changes will include a higher fiscal deficit ceiling, more treasury bonds, as well as interest rate and RRR cuts. On the Chinese currency, they will continue to maintain the basic stability of the exchange rate to keep it at a reasonable equilibrium. They're going to be exploring and expanding functions of the central bank relating to macroprudential and financial stability, maintaining stability in both financial and stock markets. They're going to be maintaining their campaigns to boost consumption and to promote income growth.
Announcements coming in there from China, but the markets have not taken it too well. All of the markets in China trading with losses of close to 1% and more. We'll pull up the GIFT Nifty as well. That'll give you an idea of how our own markets are likely to start off. And considering that weak handover from Wall Street, the negative screen that you're seeing in Asia, and it's a gap down, as you can see, 113-point downtick as we speak is what the implied open is suggesting for our own markets. And last night, the Wall Street also saw some bit of profit booking after a rally that was seen in the S&P 500 and the Nasdaq. The Dow Jones fell over 250 points, and the indices there were weighed down by a hotter than expected inflation report. And the S&P 500 also slipped 0.5%. The Nasdaq, after topping 20,000 on Wednesday, slipped almost 0.7%. And CNBC's Steve Kovac gets us a wrap of all the action on Wall Street.
U.S. markets were lower across the major indexes Thursday after wholesale prices for November came in higher than expected and tech shares moved lower. The Dow was down by 234 points, the S&P 500 off by 33 points, and the tech-heavy Nasdaq was down by 132 points. President-elect Trump rang the opening bell at the New York Stock Exchange today after being named Time Magazine's Person of the Year for the second time. Trump promised his administration would bring an economic boom, and after ringing the bell, Trump told CNBC's Jim Cramer that he's speaking with several titans of tech, that includes Mark Zuckerberg and Jeff Bezos, along with Elon Musk, to get ideas from them. You can see the president-elect's full interview with Jim at CNBC.com. The Consumer Financial Protection Bureau today announced a final version of its rule to limit banks' ability to charge overdraft fees. Among the new limitations, banks can now opt to charge $5 for overdrafts, which is way down from a previous average fee of $35. The CFPB says it will save Americans $5 billion a year, but the measure faces stiff opposition from U.S. banking groups, and its ultimate future is uncertain, with new leadership taking over the agency in Trump's second term. That's what's happening here in the U.S. Back to you, Mumbai.
Staying with Wall Street, let us also listen into what economist Jeremy Siegel gave his views on what 2025 could look like under the new President Donald Trump and whether the Trump rally is likely to continue next year.
I was quite interested, and he said, I'm not going to guarantee a rally. There could be dips. We all know that can certainly happen. You know, Trump is the most pro-stock market president in history insofar as measuring his own success or worth by how well the stock market does. However, there are many things that can happen that are beyond his control that can give us a bear market. You know, the business cycle is a part of a capitalist economy. There could be external events. There could be other geopolitical events. Nothing is guaranteed. What I think is guaranteed is that he won't knowingly do anything that he thinks will harm the value of the American market.
Well, that was the global market action. Wall Street in the red, Asia in the red, GIFT Nifty indicating a gap down. So how will all of these overnight cues impact our own markets? Our research team is joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, Vivek joins in to get us all the market cues that you need to watch out for. Vivek, good morning. It's a gap down. What's the setup looking like now for the markets?
Well, good morning. You know, it's a Friday the 13th setup that we are looking at. And, you know, when you're talking about the overnight cues, like you mentioned, you know, most of the indices, most of the overnight cues are actually indicating quite a subdued and a weak start as far as our own markets are concerned. U.S. market set for a weekly decline. Oil prices yesterday ended with marginal cuts. You know, Brent futures now hovering around $73.4 a barrel mark. But let's have a look at the Indian markets yesterday. Indian markets ended with cuts, largely range-bound trading session, and that's been the kind of trend that we've seen at least in the last couple of trading sessions. Now, along with that, remember, the mid-cap and small-cap index that actually saw 14 straight sessions of gains yesterday did see some selling pressure emerge at the higher levels, and that is something that we would need to keep an eye out for, given the fact that the broader market outperformance has been quite stark till now. Now, along with that, what actually transpired in yesterday's trading session? Look at the FMCG stocks under quite a bit of pressure. Most of them last Friday saw selling pressure, saw a bit of a bounce back, but yesterday you did see most of the top Nifty laggards being from the consumer discretionary space. Along with that, a couple of stocks that saw very large block deals but failed to recover after the block deals transpired. They were clean out trades. Both Nuvama Wealth as well as Newland Labs were in focus. Remember, market breadth yesterday was in favor of declines, you know, going ahead and bucking the trend that we've seen in the last couple of trading sessions. And along with that, look at a couple of stocks yesterday that saw quite a bit of a steep sell-off. So have a look at Nalco. Alumina prices worldwide seeing a decline. Stock down almost 7.5% going into the F&O band today. And Container Corporation yesterday, Goldman Sachs further cut its target price, retaining its stealth stance, down almost 4%. Like you mentioned, today's cues, GIFT Nifty, Asian markets all indicating a gap down start for our markets.
Vivek, thanks a lot for that. Over to Vamakshi, who would list out the stocks that you need to keep an eye out for. Vamakshi, good morning. What's on your list?
Well, good morning, Hormaz. Let me first start off with Tata Motors. They have announced that they will be increasing the prices for their commercial vehicles by up to 2% from Jan 2025 onwards. Hindustan Aeronautics is the next counter that I'm watching out for. The Ministry of Defence has signed a contract worth 13,500 crores with the company for procurement of 12 Su-30 MKI aircrafts. Ashok Leyland has bagged an order worth 346 crores from Tamil Nadu State Transport Corporation, and this is for the supply of 1,475 BS4 diesel fuel type passenger bus chassis. NHPC, the board has approved a revised borrowing plan. They will be looking to raise debt worth almost 6,900 crores and will be raising up to 2,600 crores via bonds. NESCO, National Highway Logistics Management, has declared the company as the highest bidder. The estimated annual revenue from 4 sites is expected to be 300 crores from year 4 of operation. Bajaj Projects also on our radar. They bagged an order from Solapur Transmission for establishment of Solapur substation. GR Infra has received an LOI for a transmission project in Karnataka. Quoted price for the project it is at 107.7 crores per annum. Pennar Industries will be entering a JV agreement with Zetwork manufacturing businesses, and this is being done in order to manufacture and sell solar modules and cells. Greenply Industries also on our radar. They've closed manufacturing operation at its ARM's Vadodara-based MDF plant due to breakdown of the machinery. Necessary steps are being taken to resolve the issue as per the company. Zomato is the last one we will be watching out for. They've received a GST tax demand of total 803 crores, including interest and penalty for the period October 2019 to March 2022.
So keep an eye out on all of these names. Mamakshi, thanks a lot for that. And lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. It's a gap down. What are the levels that the FNO setup is indicating?
Well, a bunch of levels that we'll be watching out for. Yesterday was slightly muted in terms of trade setup. The frontline indices down about 0.5% each. But importantly, the broader markets, the mid-cap index and the small-cap index saw a bigger fall. And that explains why, portfolios may feel that, after a big up move that we saw in both these indices, there could be some case for profit booking. What's interesting, however, is that despite that 0.5% fall that we saw on the Nifty, the trading range for the day has been around that 100-150 odd points itself, telling you that there is consolidation in the Nifty and the frontline indices itself. But two signs that we need to definitely keep an eye out on. One, second day running the FIs have sold, and yesterday the sell-off was a lot higher, 3,500 odd crores versus 1,100 crores that we saw in the previous trading session. And the second part, in the last 3-4 trading sessions, the FIs have been unwinding their long positions and adding some shorts in index futures as well. Yesterday too, close to around 1,400 crore worth net sell, they unwound 21,650 long contracts. If you look at, the FII exposure in index futures, the net exposure at the start of the week was close to around minus 38,000 odd with a long exposure of 45%. As we come towards Friday, that number has increased to minus 68,000 and long exposure dropping from 45% to 40% itself. For the options that expire next week, 24,600 seems like a bit of a fulcrum. 24,600 call, premium of roughly 200 rupees, telling you on the way up 24,800 is a bit of a resistance. However, 24,600 put as well, equally active for a premium of around 150 rupees, telling you again 24,450 would be an important support to watch out for. If you're selling that straddle, maybe the range becomes a lot broader. 24,300 to 24,900 is what one is looking at. Nalco, after that big fall yesterday, has entered FNO ban. And Manappuram, we had pointed out that maybe, the stock gets out of FNO ban, and that's exactly what's happened. So we'll keep an eye out on this one.
24,450, the level to watch out for the Nifty on the final day of the week. Mangalam, thanks a lot for that. Time for a short break. Up next, India's retail inflation has eased from a 14-month high in November, while the industrial production also expanded in the month of October. More on the other side. Stay tuned. Welcome back. Onto the big news that came in last evening. Retail inflation has cooled in the month of November to 5.48%, easing from a 14-month high. Now, however, food inflation continues to remain stubbornly high. Industrial output in October was a marginal improvement from September. Lata Venkatesh is here with the breakdown of the numbers. Lata.
It's a big relief. The inflation number has come in line with expectations, in sharp contrast to October, when we were expecting 5.8, 5.9, and we got a 6.2, above the Reserve Bank's threshold, tolerance threshold. At least this one is lower and in line. Now, the internals are not that comforting. As you pointed out, food inflation coming in at 9% is, politically and humanly unacceptable. The biggest culprit is vegetables again, which is running at 26%. But there is also a bit of a surprise element in edible oils, which has come 13% higher. Mind you, this is because of the additional import duty that was imposed. One thought, most of the economists thought that that was already absorbed in the October numbers, but looks like the November prices are also reflecting it. And that's why we have a high edible oil prices. And cereals hasn't quite fallen enough. At 6.88, it's almost 7%. So this is not that narrow a food inflation. It seems a slightly widespread food inflation, which is a political problem. It may not be an arithmetic problem for the Reserve Bank, especially if the December inflation number comes in below 5.5. If it comes at 5.4 or 5.3, which is what most of the economists told me, then the Reserve Bank governor could have the comfort that he has 3 months of declining inflation. 6.2 in October, 5.5 in November, and hopefully 5.3 in December. That's the last number he will have when he gets into the monetary policy in the first week of February. He will have the confidence to cut. So fingers crossed now on the December number. One hopes vegetable prices will fall with the winter month, with the cold setting in, and the Reserve Bank and the MPC will have enough confidence to go ahead and cut rates. You can't have that confidence when you have a December number, which is even higher than November. So really, December inflation number becomes very crucial. On growth, IIP, well, it's a slightly lagged data as always. IIP at 3.5 is as per our expectation, as per the CNBC-TV18 poll. It's just a bit of a disappointment that consumer non-durables is just about 3% higher. Consumer durables is just about 5.8% higher. And capital goods is just 3.1% higher. One thought that October, people would be producing for the festive months of November for consumption. And 3.5 is a little dull, and it doesn't bespeak of a 7% economy. That is the only complaint with the IIP number, but otherwise it is in line with expectations. Short point, nothing to complain about the macroeconomic numbers, at least in terms of the estimates of the economists.
Lata, thanks a lot for that. Time for a short break. Up next, Gukesh D beats Chinese opponent Ding Liren to become the youngest ever world chess champion. More on the other side. Stay tuned. We'll be right back. Welcome back. Ending the show on a happy note because we have a new world chess champion, and that is India's 18-year-old Gukesh Domaraju, who has created history. He sealed the championship in the last classical game after defending world champion Ding Liren blundered towards the end of the game. Both had won 2 games each in the 14-game championship. They were tied until the last match with 6 points each. Gukesh has broken the record held by the Russian Garry Kasparov for nearly 4 decades, who had won the title at the age of 22. The prodigy from Chennai is also only the second Indian after Vishwanathan Anand to win the title. Now, he started playing chess at the age of 7 and earned the title of Grandmaster at the age of 12. The President Draupadi Murmu and Prime Minister Narendra Modi congratulated the young prodigy on social media, calling his win the result of unparalleled talent, hard work and determination. And on that happy note, it's time to call curtains on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for the final trading day of the week.